All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open for about an hour here this morning, and an interesting argument can be made that we've seen more sell pressure in the market this morning than we saw on aggregate yesterday. And I know you say, well, that's kind of ridiculous because yesterday the market was down so much, right? But when you look at where things opened yesterday and then where they closed, many things actually closed higher than where they opened, and a little sell off into the close changed that for the market itself. But we saw that element come in. Today, it has been from the opening tick, sell, 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 and we just saw a little bit of 20K volume come in. Here's the 1 minute chart, and here we have the first candle this morning on the gap up, and we saw this kind of 5-point upside candle was sold into immediately, and then we've just seen this bleed on down. And this is a 45-point range, from top to bottom here. That's 1.5% in the market. We just saw the 20K volume come in, and so what does that tell me? That tells me the chances are pretty good that we do not close below this level. Could we break this level by 50 points and then rally back? You betcha. You betcha. In this environment and what's going on right now, we could see that. I'm not going to put it past the market. I'm not buying the market here on that 20K candle. If we do see another, heavy sell-off, I'll be tempted to step in and buy into the close or buy into for a closing rally or something. But I think it's one of those where today you can make a very good argument that the sell pressure is worse. The selling is more kind of damning on the market today than what it was yesterday with the gap. And we saw the metrics turn yesterday. They continue to be very bearish. We're going to continue to get big moves. We saw the S&P futures up 30 points last night. In normal market conditions, oh wow, up 30 points. I mean, come on, market's going to no. It's one of those where they're just, when the volatility increases, there are bigger vacuums, and so a little bit of buy pressure can zoom things up a little bit more than what it would in most market conditions here. Okay, so anyway, that's the market open. It's pretty ugly. No matter where you look, there's nothing that you look at and you go, wow, this is super juicy. Here's small caps, a lot more selling pressure today than we saw yesterday. Yesterday was just a gap down and spin. Today we're seeing real sell pressure come into play. And if we look at what's going on globally with the coronavirus, you start hearing people talk like it's out of control, it's uncontained, it's not containable, and those types of things start to increase the panic, increase the fear. You can say, well, why would it sell off? Why would the markets care? It's let's face it, it's only affecting X number of people. And when you look at the just raw numbers relative to the global population, you're right? But markets go through periods of fear and greed. And right now, the coronavirus is giving that fear element to the markets because of a lack of containment. And if there is a lack of containment, what does that mean for the global economy? How much actually gets shut down? What happens to earnings for companies based on that? Because we've already seen companies come out and warn, right? Apple came out and said, look, our numbers aren't going to be all that, aren't going to hit what we expected because of the coronavirus. Now, the bulls are going to say, and rightfully so, it's a one-off. It doesn't really matter. It's a one-off. It's one of those things where, okay, it happens, and yes, they're going to have a quarter that dips because of it, or maybe 2 quarters that dip because of it, but that's it. And after that, business as usual, and off things go. And the bulls make a very valid argument. And it's one that when rationality returns to the market will be a great argument to be a buyer. But what we saw yesterday with the huge gap, right? We start to see that panic come in. And it's one of those where we're seeing that continue. And it's one of those where it can continue for a long time, right? We talked about the Ebola virus back in 2014, right? And it's one where, let me pull it up here for you. 2014 12/31. There we go. And you can kind of see the market in this kind of just roll on downhill, right? The Ebola virus, we knew about it here in September. It's getting, actually, we knew about it back in March, but getting a lot worse. Okay, things are getting bad. Then we get this big up rally. Okay, things are going to be okay. And then the panic sets in. And it's 1, 2, 3, 4 days basically of heavy panic there for it. And, then we get the bounce back up because people realize what? Yeah, okay, it's going to affect quarters, but it's not going to affect business long term. They're one-off events, and we will see that. We will get into that period, and the bigger the panic that comes in, the bigger the bounce that will come in here for it. I think from from an investor and trader standpoint, you're kind of watching and kind of rooting for it to kind of dip a little bit more because it's going to provide more opportunity the more it dips. If these dips remain shallow in the market, which is what they have been, if the dips continue to be shallow, it just doesn't provide as much opportunity. And, so we'll see. We'll see how it, all plays on out. I don't have a crystal ball or anything. I know I get accused of having one sometimes, but I don't know how it's going to play out. We are dealing with a biological issue, and I'm no biochemist or anything like that. I see the same news that everybody else sees, and just we can see how it is playing out in the market and swaying. This element of Teflon for the markets into a period of fear. But let's face it, what has changed? Have earnings changed? Yeah, they have. They've changed because of the fear that earnings aren't going to come in as expected. So we do see a change there. Have we seen a change in the Fed? No. Excuse me. My apologies. 1 second. All right, my apologies. But we haven't seen a change in the Fed. We haven't seen a change in the market bias for the President of the United States. And, those factors continue to be with the market. And we also haven't seen a improvement in the substitution effects. In fact, it's one where we've seen more erosion, right? The bond rates have continued to fall, and they do continue to drop here a little bit today. And as long as bond rates are falling, it becomes even a worse substitute here for the market. Again, this isn't the current bond market. Let me get the current bond market. There we go. That looks a little bit better there. All right. So anyway, that's the market. There are no new challenge signals on the board right now. In fact, there are only 2 crossovers out there. But I thought this morning would be a good morning to go through the challenge watch list and take a look at where stocks are, which ones are close to triggering, which ones need a lot there. Because when we have a day like yesterday where there is no differentiation, pretty much everything gets thrown away, it's the type of action that really affects charts and takes away some of the individuality of specific stock charts. And we saw that yesterday. When that happens, and, this is something we addressed in building the algorithm here for the challenge, that this is going to happen from time to time. It's something that's very common in the markets. how do the signals adjust? Do we go through a long period of no signals? What happens? Are we just kind of stuck in cash for a while? And different time periods in the past, as we've looked and measured and tested, have done different things. So I can't sit here and say, well, this is what's going to happen. We're not going to see any signals for a week, and then we'll see a bunch. I can't say that. We have seen periods where signals continue to propagate throughout, this type of environment, and we've also seen where signals are very, very slim, and so I don't know which one we're going to get. Bottom line, we'll react to the signals that that I get, and we'll run here with them. But let's take a look at what the individual stocks themselves look like and determine, are we close to getting a signal? Okay, so let's start with American Airlines, alphabetical order, right? Nowhere close to a signal. Nowhere close at all. We have the 3 well below the 7. This isn't going to give us a bear signal anytime soon. It's not going to give us a bull signal anytime soon. In fact, we're probably looking about 3, 4, 5 weeks until we can potentially get any sort of signal on American Airlines. About half of the watch list looks like American Airlines. And, just something where I could probably take it off the watch list for the next month and not miss a thing. I'm not going to do that, but, it needs so much to trigger bullish, and it needs a lot to trigger bearish. It needs a pretty good rally up here to 27 and then to kind of roll over at that level. So chances of getting a signal very slim. We have a better chance of getting a bearish signal on Apple should it have a nice little rally up here and then, start to dip again and have a lower high come in. But, we could get a bull signal on Apple here as well, but it's not going to happen today, not going to happen tomorrow. It just isn't going to happen anytime soon with how far away the 3 and the 7 are from each other. And this is the one thing about the trigger mechanism for the challenge. When the 3 and the 7 are far away from each other, it takes a while to get a signal. The further they are from each other, the longer it probably is going to be until the next signal. And right now, we have a lot of 3s and 7s that are pretty far away. Here's Amazon, right? They're pretty far away. So, yeah, we could get a bull signal here. We could see it turn around here and go. Is that going to happen today or tomorrow? No, it just isn't. It would be very unusual to see, because even if we had 2 big up days and it rallied to 2080, we would not get a crossover on the 3 and the 7-day moving average. They're $40 apart. I mean, they're 2% apart. That's a massive separation there with the 3 and the 7, and that's a product of what we saw yesterday. Boeing, same thing. Look at that, how far apart the 3 and the 7 are from each other. I mean, they're $6 away. They're 2% away again, which is just a massive, massive number. And you'll notice most stocks, that's what they look like. Alibaba, the 3 and the 7 are starting to get closer here today. This is something where, if it doesn't go down anymore and we see an upside crossover, we can see a signal come in, as early as the end of this week, maybe into the early next week. But Bank of America, same chart as Apple, right? Same chart as Boeing. In terms of this separation of the 3 and the 7, we're talking about 80 cents away, a little bit more than 2% away. So that's going to take time for it to, converge, for things to kind of, shake out and give us some sort of signal there. Same thing with Caterpillar. And you'll notice they're all about the same. Here's Chipotle. Now, this one's not as far apart. This is only just over 1% away. So much greater chance of a bullish signal coming in sooner than later for Chipotle. But, we had the downside crossover on Monday, or Friday, and Monday, my apologies, on Monday. But, coming off a new high, not going to get a bear signal there. But, it does have a chance for a bull signal. Conoco, you can see this right in that Boeing category. And you'll see they don't look all that different. Now, here's CSX, a little bit of differentiation here. Here's CSX. Look, the 3 and the 7, they're only 50 cents apart. We don't have that major separation like we do in a lot of names. And so CSX, could it trigger bullish? Yeah, it could. And this is one that could trigger as early as Thursday, maybe Friday. It would need to kind of stabilize here and start to push up off of this level. But CSX, very different chart from a Boeing, for instance, in terms of its ability to signal. And so, while yes, we have a lot of Boeings and American Airlines out there that just are not even anywhere close to a signal, we have a few CSXs out there, and as we go through the watch list, you'll see a few more, right? But here's Chevron, okay, Boeing chart basically. Here's Dollar General. This one, held up very well yesterday. This has the opposite problem. The 3 and the 7 are separated on the upside, right? So I need a downside crossover, an upside move to get a bullish signal. I'm not on a downside crossover. I'm not going to get a bear signal as the stock's at a new high. So it has the opposite problem of a Boeing, but similar principle, just opposite directions, right? With Boeing. Here's Disney. I mean, this is Boeing, right? That 3-7 separation there. Emerging market ETF EEM also has that 3-7 separation. EOG Resources the same. EWW similar. EWZ same. Here we go with Ford. This is one that's probably going to be removed from the watch list as it has broken down below 8. And it's one that I do think there's some bankruptcy risk that is coming into it here. I know it pays a massive dividend and everything else, but this is a stock where if we look at the last earnings and we look at kind of what's going on with the industry, Ford's in trouble. Ford's in some serious trouble here. And it's been one that for several years we've been able to talk about buying dips because they're dividend plays, and that changed last year. And the options are not too terrible, but this is one that probably is going away for the challenge. But even then, the 3 and the 7, they're way too far apart. Facebook, same thing, 3-7, way too far apart. FCX, same thing. Right? You see the theme. Right? You see the theme. So instead of repeating the theme, let's go take a look at the stocks that are a little bit different. Here's GLD. Here's gold. Right. Well, we're not going to get an upside 3-7 crossover on this anytime soon. So chances of a signal, just aren't there. General Motors, just not there. Barrick Gold, GOLD, just not there in terms of, giving a new entry signal here. For as much as I'd love to trade a new entry signal, do need some consolidation or some pullback in order to get that signal. Then Home Depot earnings here today. This has an upside 3-7 crossover if it rallies a little bit more. So this is something where coming off its earnings, holding up very well. This could, potentially set a signal today or tomorrow. So is in that kind of CSX basket. The other ones that are kind of in that CSS basket where they have a chance to trigger, maybe relatively soon, JD. This is one that does have some potential there if it's able to hold a gain. We have, let's see here, JP Morgan, not really, but Coca-Cola and Pepsi. Right, these are both stocks that, yes, they pulled back yesterday. Coke tried to break out on Friday. Yesterday kind of hammered it. But, we could see a 3-7 crossover come in with just a little bit of rally on Coke. Would not take a whole lot there. Kohl's, this is still running with a bear signal, but we do have earnings coming up, so not going to trigger anytime soon. MGM, this triggered on Friday, so not set. It's not going to trigger anytime soon there. Let's see. The other ones that have a chance to trigger, kind of like Coke, CSX. We have, let's see here, it's AT&T. We're not there yet, but I want to see Netflix. Netflix is one that, that sell-off yesterday was relatively mild, compared to others. If you look at the 3 and the 7, it's only $4 apart. so just over 1%. So this is something that if we do see some rally, we could see an upside crossover come in. So I'd put it into that category of of Coca-Cola and CSX. Here's Pepsi, had the downside cross, had a interesting action on it yesterday, but would not take much to get an upside 3-7 crossover. They're only 60 cents away. So, in that same group with Coca-Cola, Procter & Gamble, same thing. In that group, they're not 3 and 7, not that far away. Would not take much to trigger. Starbucks, unfortunately, would take a lot to trigger, as I'd love to go and play that to the upside when things, calm, but there's no sign of that here just yet. And then AT&T. And their stock held up very well yesterday, and has the downside crossover yesterday, but didn't trigger bearish. But the 3 and the 7, they're only 7 cents away, so it wouldn't take much to get a nice little breakout signal for AT&T, which would be a breakout of about a 3.5-4 month consolidation, which could get very interesting. Could get very interesting there for AT&T. Would love to play that if we get it. We saw bear signal on Target yesterday. They have earnings upcoming, so nothing close. And then the last one here that has any real potential is Verizon. Let's see if we get there. Vulcan, yeah, there's Verizon. And Verizon, has had a rough go this year. It has been one of the laggards out there. You compare and you say, well, Verizon versus IBM. Well, IBM's performed much better than a Verizon. And it's had a couple harsh sells come into it. And yesterday held up very well, kind of like AT&T. This is something that we could see an upside 3-7 cross come in. Now, AT&T has better, technicals overall, so I would not be surprised to see both crossover at the same time and only AT&T trigger. But Verizon does have some of that potential. And then let's see, last but not least, here we have U.S. Steel, which has a fresh downside 3-7 crossover on it here this morning. It is the only one with a fresh downside 3-7 crossover on it this morning. And it could trigger here as early as this afternoon. So we'll have my eyes on that. The options on it, though, just they've really eroded over time here. And just in terms of the magnitude of move that U.S. Steel has to make in order to get the options to really move significantly is pretty big. The implied volatilities are up here in 60% area, so pretty hefty there with those. Okay. All right, looks like market's continuing to sell off here, pushing back into a new low. We're getting some pretty hefty volumes just across the board, but nothing that is, standing out as, hey, this is, absolute bottoming. We have our first 20K right here, so I'd be looking at 3205 as an area where, should the markets continue to sell off, that it can rebound to here before the close today. But as I said before, when I got on video, this is uglier selling today than what we saw yesterday in so many ways. And I know yesterday the market index was down more, but today the selling is much more pervasive. The selling is much more, it's not a gap. The selling is on a gap up, and it's not just, prices changed overnight and everybody's sitting on their hands. Today, fund managers, they're making moves here this morning, and it's all sell button here so far. All right. So anyway, that's a stroll here through the watch list. As I mentioned in the morning note this morning, I will not be on video here this afternoon. My apologies there. I will be on video tomorrow morning, and then I won't be on video tomorrow afternoon. And then I'll be back to the normal schedule Thursday and Friday. So we'll go from there. Any new signals will be posted on the challenge spreadsheet. Any new trades or signals that get traded, they'll go out via text, Twitter, email alert. They'll be made in the challenge account here, and I will I will do my best to be able to jump on and and put a couple comments into the message feed, but I may not be available to be able to handle that. So any new trades that it's just running with the algorithm. So they'll be handled by others here at Trader Minute. So we'll be doing that for today and tomorrow. Again, AT&T, Verizon, kind of close their CSX maybe. But we need to see the market start to turn around pretty soon. But I think there's a pretty decent chance that at least today and tomorrow, we're probably in cash for the challenge. More than anything, and I'm okay with that. I'm more than okay with that. There, let the market shake on out, and let it shake on out in a big way, and it will provide better opportunities as we go forward, and we'll be able to nail them with the crossovers as they come on in. Thanks for being with us here at Trader Minute. Have yourselves a fantastic day, and we'll talk to you. We'll talk to you tomorrow. Take care.